Good evening, everybody. How's it going? Conference fan. There we go. All right, what's up? Good evening, everybody. Hopefully, you guys had a good Monday. We're gonna go ahead and give everybody just a few minutes as I alert, and then we'll go ahead and get started. All right, you might hear a little bit of Ellie going night night, so sorry about that. All right, live now. Perfect. Okay, so we're gonna go ahead and start making our way over to the main news. We're going to take some requests tonight, as well as go over some of the economic data and stuff that we have going into the rest of the week. All right, so let's see here, how are we going? All right, cool. People are hopping in here. What's up? Good evening. Good evening. All right, so first things first, today we actually saw the S&P, the overall market, move to the upside. We saw SPY up 2.59%. We saw the NASDAQ up 2.27%. We saw the Russell 2.65%, and the Dow Jones up 2.66%. So we saw some really nice pushes to the upside, mostly from our ETFs. And if you guys remember this morning and on Sunday, we talked about this little falling wedge build, nice flag. And so we ended up breaking that downtrend, which could end up sending us up into a gap. But all that being said, we got a couple of headlines here that we need to cover before moving moving forward. Um, so number one, every sector was green today, with energy obviously 5.61% leading. In international news, Turkey inflation rate hit 83% as President Erdogan vows to keep cutting interest rates. UK market stabilized slightly as the government scrapped its proposed tax cut for the wealthy, which initially accelerated the gilt and pound decline. Meanwhile, the hits for Europe keep coming as the worst ever bird flu risked next season's food supply. Global factory activity and ocean freight orders weakened in September as demand softened and supply chains remained pressured. Tesla shares, as you guys know, fell 8% after the electric vehicle maker's third quarter production delivery numbers fell short of analyst estimates. I am, as you guys know closely, we swung puts. I actually TP'd right around 248, ended up giving us a full leg down into our zone, right there, right above 240. So anyway, we saw Myovant Sciences soared 40% after the company rejected a 2.5 billion takeover from Sumivovant or some shit like that. Vigilant ran 25% after selling its military communications to L3 Harris for 2 billion. Peloton announced that it would put bikes in every Hilton branded hotel in the US, with partnership providing at least one bike to each of its 54 hotel fitness centers. 5400, excuse me. SEC charged Kim Kardashian with unlawfully touting crypto security. Ex-CEO of bankrupt crypto lenders Celsius withdrew 10 million weeks before the company froze customer accounts. Finance is set to train law enforcement on how to stop crypto crime. Um, Anyway, couple of other things here. So it's no secret right now that Credit Suisse has seen better days. Everyone assumed that the anonymous tweet was about, which credible source, that the tweet was coming from David Taylor. A credible source tells me that a major international investment bank is on the brink. As a result, everyone began offering their takes on the situation, and as expected, some were good, some were bad, some mostly were meh. But as per usual, the extremes were amplified, and not before long, Credit Suisse was a trending topic on Tinder. So not a single day of trading doesn't mean that everything is hunky dory. That's not the point. Obviously, that's not the point here. The point is to remind people that their trading investing plans and approaches in an environment as crazy it is with many economic and political issues happening in the world is easy to get distracted and become macro tourist. While we're simply using this term slightly different than Mark Dow, who coined it, we're referring to people who suddenly become experts in topics they know very little about. Anyway, uh, overall, the whole Credit Suisse thing, we can't give it any stock until we actually see, the numbers. And so, people who don't have the qualifications to be speaking on it oftentimes voice their opinion, and people listen. Um, anyway, that's about it as far as my headlines are concerned. Moving forward, so again, recapping on today, we swung Tesla. I did try and bounce Tesla. I ended up getting faded. I did only take a very light position, lost about 160 bucks, not a big deal. And then at the end of the day, I secured a really, really nice bounce right here on this 15-minute candle for some calls to the upside. Those ended up running about 120 bucks, 150 bucks per contract. But I took profit on a few of them. The rest of them I ended up cutting for around no loss. And then I left one of them right now because I do suspect that Tesla could end up seeing a potential, and we'll see if it gaps down, but I still see Tesla with a potential leg to the upside. So if it gaps up above 247, I think we have a chance. If it gaps down or gaps up below 247, unfortunately, we may see another down day on Tesla going and hitting the 240 zone. So for this one, it's really, really simple. You guys know the deal. Everything can be boxed out. So while the daily candle, right, and this is kind of what I want to point your guys' attention to because we want to start obviously on a lower time frame or on a higher time frame to get an idea of what exactly is happening. Right here, there's a very large or decent support around 241 and 240. Okay, so it's not just that. So it's just right there around 240. And we can see that this candle essentially enveloped that. So this candle opens here at 254. This candle opens here at 254.75. And this one moves in the opposite direction. So I would be anticipating some sort of a bounce. And the median here, which is right at the middle, that's going to be 249.25 and 250. That's going to be where I want to see some higher time frame candle closes, and that way I could potentially take this to the upside because it does look pretty good for a potential bounce. Otherwise, we could see a decline on Tesla all the way down to the 230 mark. So we don't want to catch a falling knife, but this one does look like it's in need of a bounce after closing at 265 and closing today at 240. Big loss for Tesla. Um, Moving forward, Meta is on one of is going to be on the top of the watch list tomorrow. The reason being is like the rest of its counterparts, except for Meta is holding a bit more tension, if we want to look at it that way. This one is up against a downtrend in what appears to be a broadening wedge. So right here, we've discussed this morning. Um, I'm not a big fan of the broadening wedge. But what I do see, right, that I know is that we have what appears to be a descending triangle. So a rejection, right? So here's what needs to happen. We need to see a gap up above basically 140, but above 139.50. So above today's close, and then retesting that level. I do think that there's a higher probability of going and retesting 141.65 and having this actually break to the upside. It's really, really simple here, guys. There's no need to overthink this chart. It's very, very clear. 139 is a super evident level. 138.50 is the support that we held today at the end of the day. And that's going to be, if we gap down below that, then again, that could spell trouble for Meta. But otherwise, um, the main levels here for continuation of the downside would be 135.35. So no short at the trend, but a short at the 135.30. Oftentimes people will get caught up in this trend, but this isn't a level 136.32 or at the 137. It is the level right here that would end up faking people out if it ended up bouncing to the upside. So clean chart, really, really pent up, and I'm really looking forward to trading this one, whichever way it goes. Because again, on the daily, if you look at meta, very, very pent up. We can erase all of this. And as you guys can see, it needs to retest, possibly retest this 155 area before continuing its journey to the downside. There's also a pretty interesting gap all the way at 167. 167.33. So there's still the possibility that we see a leg up on Meta, and I'm still banking on a potential squeeze if we do see a run up into earnings. So Meta is definitely going to be on the top of the watch list going into the rest of the week and into earnings season. So what's up? Good evening, everybody. This episode is brought to you by Hoist. I'm just kidding, but this shit is delicious. It's way better than Gatorade. Nothing needs to happen. What do you mean nothing needs to happen? You're talking about levels or do I think that Tesla is going to recover this week? I think there's a good chance for a bounce, but as far as a full recovery, we got, if you look at the weekly, we got three major rejections. And so I could actually see Tesla's making its way down to the 185 mark. It's still an option, for sure. So all right. So anyway, that is my watch list. I also still am watching Netflix going into tomorrow. This one didn't do much, but it did hold 134. Excuse me, that this 133 and 135 mark. So it's still holding up to the upside. I still think that Netflix will go test 250 before it's all said and done. Um, okay, that's it. So if you guys have any requests, you guys can go ahead and drop those in there, dollar sign, and then whatever it is that you want me to take a look at. And we'll go ahead and we'll get to it. So Potter been looking at the SPY quarterly chart. Would that be a three black crows? Um, we'll take a look at it. Okay, so everybody really wants to take a look at SPY. So let's look at SPY first. Number one, we want to go ahead and look at how, and I actually explained this today to one of my mentors, so I'll explain it to you guys as well. So I've seen this before, and granted, SPY does have a good chance of still moving into the 350 zone. But what happens is when you have a weekly candle and daily candle closing at 257 or 357, right? Showing a breakdown of the previous level of 365.33, right? So this little candle here that can put shorts in a tough position. And this gap up that we saw is one of those things, or that move up that we saw today is one of those things that can put pressure on shorts. And before moving to the downside, we do have a trend starting from these highs, moving down to the lows. If you go to the daily time frame, it becomes a little bit more clear, and that could move SPY back up. There's also a gap right there at the 374 level. So it could be 374 before it's all said and done. But in my opinion, right now, it's really, again, I like to simplify things. We can see that the majority of sellers are sitting right here at this 370, 67 level. So um, Cool, I got it. So anyway, today, and I spoke about this morning. We would need to see a candle close above 365.75, and that would likely allow us. So whether we gap down, so as long as we hold the 365.75 level, I think that we're fine. There is a little 365 even. So really we'll call it 365. If we can hold 365 overnight, I think that there's a decent chance to still go and hit our resistance up at 370.55. There's a gap to fill at 370, and then there is another gap to fill right here at 373.78, right? So, or excuse me, 374.25. So this right now is our play range, and to me, I think that the fact that so look at it this way, right? There's a story, right? And someone described the way that I break these things down is looking at the story, and that's kind of what we want to do here, right? With SPY, let's look at it this way. Sellers, we get a gap down, sellers push down, they continuously and aggressively try and push SPY down below this level. They're unable to do it at 363.40, which is going to be a 75% mark in this zone, right? So unable to push this stock any lower, they finally, on a gap up, fill that gap, they get the momentum, and they drive it down to what ultimately becomes our support at 360. Because it took so much effort to push this down, it likely exhausted sellers. This is also the beginning of the leg down. And this is also when you start to see that consolidation that often takes a lot of people's money, right? That up and down, choppy back and forth. So again, squeeze, pop, they it runs into and if anybody's ever heard me break down anything about gaps, you guys know exactly what I'm about to say. Where do you guys think that SPY rejected inside of the gap? 50%, right? So when we're looking at um and anyway, these buyers steamrolling out, this is just a simple technical squeeze. You get a gap down, right? Sellers, again, look, bounce, bounce, bounce. It is exhausting. The more that you bounce, right, with that wide of an oscillation or that wide of um, volatility, right, that is going to exhaust buyers. So eventually, when sellers are able to push it lower, immediately on that gap down, you start to initiate, right, a squeeze back up. Sellers who looked at this 4 hour candle and said, there's no way we're not going to 350. The next day or Monday, you gap up and immediately positions start to get exited. And once you break up above the floor, right? So we could go down here to the lower time frame and we can see how this look at how SPY handles itself. Break. This right here is enough to tell you that candle close holding 360.65, squeeze, right? Sellers desperately try and bring that back down for a full engulfment to go and fill that gap below. They're unable to do it, and it sends SPY back up to the upside. You guys noticed that ETFs moved and not now. I think that Apple moved. Yeah, Apple moved really, really well. And I haven't touched this fucking chart, and that is beautiful. Look at that. If anybody took Apple today off of that, that's crazy. We also saw, I think, Microsoft, right, taking a little bit of a leg up. Um, so we did see our main movers, but a lot of other stocks, yeah, including Meta, really didn't follow along with that move to the upside. But all in all, looking at SPY, I think that it's just simply a gap fill here, and that could continue that move to the upside. One thing that I don't hear a lot of people talking about, I just started seeing the articles talking about the fact that SPY, or excuse me, that earnings season may be something that causes stocks to move to the upside. And so that's something to consider. Hold on one second. Stock futures pop on more than 1% of fears of systematic bank failure. That's funny. Yeah, it's good as Gatorade shit. All right. So anyway, Two levels to watch for SPY. Obviously, it's this 372.41, 375, 376, excuse me, and then a top out at possibly 378.40. But it still looks good to potentially move to the upside. A gap down below 365.62, that could spell trouble for SPY, quick gap fill, and then a likely move back down. So again, you have a gap down, you have a gap up. So it's just a matter of reacting, but looks pretty good to me. Even if earnings are good, isn't that likely to that they give some really tame or even downwards guidance considering the overall market? John, so one thing that I talked about this morning is the fact that um, guidance has already been lowered, right? Guidance and expectations were lowered in anticipation for what we've already seen. So a lot of we could already be priced in, right? We've seen a lot of stocks. Again, just Meta as an example. Um, I mean, shit, we shorted for 140. We see Microsoft, Apple, all taking really, really big spills to the downside. Even semiconductors, which they lowered their guidance as well on earnings last time. As you can see, you ran up into earnings and then monumentally dumped. So that lowered guidance is easier to meet than a raised guidance, right? Which could elevate stocks. But then if you miss that guidance next quarter, that's when you see those. So that's a lot of the times how you can factor in your trades. But so yeah, so that's what I would be looking for. I think a lot of lower guidance is so here's how you can look at it this way. There's a lot of beat up stocks, even financial stocks like SQ, which on paper is pretty good. But you've got PayPal, um, all of these stocks just absolutely clobbered. And going into earnings last season, we really didn't see much. But as you can see, bottom, run it up, right? Here, you actually bottom at earnings and pop and run it up. This was in a different cycle, but here, earnings absolutely clobbered, and you end up flushing and getting a clean dump. But that's again, one of those things where paying attention to the guidance, paying attention to expectations and what they're possibly going to be running into as far as whatever it's financial, inflation based, dollar based, whatever may be afflicting them the most, and then factor that in. So for me, whenever I'm taking like any earnings trade, if I see a company that has raised guidance, but then that sector in itself stops seeing the same movement, or we're seeing a lot of different partners lose ground, that's where I step in and I look at, okay, well, this company has gone up into earnings, or this company has skidded into earnings, and so it's sitting relatively flat. One of the reasons that I took Nike, right? Nike was, even though it was kind of like sitting here, it was seeing a really, really slow decline. And then only right before earnings hit, which was caused by other companies, right, in the same sector, seeing that downfall, and then obviously measuring with the standard deviation channel, I knew that there was only one place that I would likely target Nike. So, but anyway, those boxes generally cover consolidation, candle wicks, or boss. Why doesn't the floor of your spy lock? Why doesn't it include a leg down? What and how do we not get faked out by the leg down, given that the bearish candle below this final? Okay, so that's a really good question. So the reason that my box, right, is not there, um, because there's no other price that agrees with it, right? One, two, three, four. This Now, how do I avoid getting faked out? You don't short when it breaks, right? Or you don't you either A, wait for the if you shorted when it broke and you saw an hourly candle close, it still was a good short. But opening up, and this is the number one thing. And this is I say this every day in my trading, when I'm in the Discord. When I take a trade, it either it either works or it doesn't. There's no in between. So if I decided to short SPY and my stop loss, which my stop loss, the reason that I take positions where I do is because I want my stop loss to fall in line with where other people are putting millions of dollars. So I have some backup, right? So I know that if millions of people attempted to drive SPY down below 360.50 and were able to do so on Friday, that if we gap up, that would likely cause an adverse reaction. Not only that, but we also were able to observe the fact that it had a nice little downtrend and a little bit of that consolidation here to the downside. So how do you avoid getting faked out? You need to observe trend. You need to be able to, again, well, let me answer it this way. There is no way. There's no way. If you're scalping and you're entering, if you're shorting here, that's no good, right? You either so there's one or two ways to do this, right? This is the reason that I divide SPY into these quarters. 50% is like the tug of war line. When that gets broken, that's when you see, for the most part, a leg down depending on the price action and volume that is consistent with that level. Now, there are 75% marks, and SPY especially likes to respond to those. But in this case, most of the time when a candle closes above, you go to resistance. A candle closes below, you go to support. You can't break above, you go back down, right? So if you're observing price action and you're watching SPY, if I'm looking at SPY and I see it reject, so one of the reasons that I took Tesla, right, it had a bear flag on the hourly, but not only did it have a bear flag on the hourly, we could also go over here, chop this up just a little bit. Let me go down to the 15-minute. Yeah, so tighten this up a little bit. So just to be specific here, okay, because I want to kind of zoom in a little bit for you guys. So one, okay, Tesla, we could observe that there was a downtrend. And I'm actually going to go back to the hourly now. So right here, okay, and this is what I preach: candle closes from the highs to the lows on Friday, right? We close, or excuse me, on the 28th, we close with a little bit of a bear flag. We gap down, we pop, right? And we reject with a bear flag, right? We reject that top. That's 289. I'm taking that short. And that's the reason why we did. A lot of people were able to close out, especially if you had a longer expiration, 50, 60, 70, some of those going over 100%, and then going into the next day. So I'm actually a little bit mistaken right here. So it's right there. So that's my floor down here at the bottom. That's 273. Lots of candle closes here. Right here, we see candle close there, push back, push back, push back. So not one of those candles closes back up above that level. And seeing that you're breaking out of a bear flag, that's one of the reasons why we swung the 240 bull. That's why I signaled the 240 puts, is because we were closing up underneath the same level that needed to be held in order to reverse the trend. No, I wasn't paying attention to delivery numbers or anything like that. So, um, go back and rewind if you want to see my analysis on Tesla. I've already broken that down for you guys. So, um, is that a large red candle with a long wick? Uh, is that large red candle with a long wick above resistance considered a liquidity sweep? If you're talking about this one, yes. So a lot of the times, eh, people are very reactionary. So if you see um, a gap or something like that quickly get filled, or in the morning you quickly rush up to resistance, that brings in, right, because the most volume is especially during the beginning of the day. And they say dumb buyers open, or dumb buyers open the market, smart buyers close it. And so in this case, Tesla going up, scooping up some of that liquidity, and then driving that price back down. And you even see the candles close, most of these candles close at 280, 265. And then you see that gap up and then that wick up and then that close back down. So um but yes, that is a liquidity, and this is extended hours, right? So you're holding this in after hours, you move up, and then you see that really big move down. And again, there's so for me, and again, this is my strategy when I'm looking at a stock or I'm looking at a trade. One of the things that I'm looking for is I'm not just looking at the boxes, but I'm looking at how the boxes and trend. I want to see a confluence, right? I need to know where sellers are at because when sellers have to exit their position, they send the stock up. And those are technical levels that we can find. And when I see trend or moving average, a major moving average in line with that setup, that is the all the confluence that I need. That's all I can do. That's all I can do. I can observe volume, I can look at price action, I can make sure that my charts are tidied up and clean. But at that point, once I see a confluence, and especially candle closes, right? Candle closes are matter a lot. That candle closes underneath that trend line. So not only does it go and hit 288.50, but it closes underneath that trend. So you have a confluence here, that morning volume, right? They get that price under control and they drop it like a fucking hot rock. And that crushes any upside potential at all, right? As far as like people trying to get out of their position, everybody takes losses because this is a monumental reversal. So anyway, all right, let's keep moving with the charts. AMD was next. So I actually should, yeah, I pretty much have. So AMD and most semiconductors have this crazy look in their eye right now. We can go to the 4 hour and kind of clean this up. Um, so from the highs, it does appear that this has a bit of a wedge right here. I've got this little square marked out for you. So this is good, right? Let's go and zoom in a little bit. So 1, 2, 3, 4, 5. We get a retest there. And it looks like you got a nice 4 hour candle close. So no matter what, AMD needs to open up above $66. If it can do that, and I would say that, it would be preferable to possibly gap up to about 67. So if you gap up to 67, so finding that median, right, that where that tug of war line is. So it looks like candle close there. Okay. So I'm gonna bring that up right there. That is 67.55. 67.50. Trying to make sure that's perfect. Okay. So a gap up maybe around 60, 67.35, 67.40. That would allow you to find your floor. So you could go for a gap fill, but as long as you hold $66, you can continue moving to the upside. Now, I do like this downtrend a lot. Now, I also really like wedges. They're one of my favorite patterns to trade. Mostly, yes, they do fake a lot of people out, but they don't get me because for the most part, very rarely do I ever get caught on a wedge. And that's because I'm really careful and I've been able to, and again, this isn't where never seen this in a book, anything like that. I've only observed it for myself. And that's usually measuring the entire pattern and then dividing it by 50%. And for the most part, you're going to, out of a wedge like this, get a 50% reversal. Now, it just so fucking happens that that is 80-50. What? Oh, I'm sorry. That's ridiculous. So 80-58, right? It's dead slap center in the middle of this 200-day moving average, moving right in line. That's a smoking setup, right? So here's how we play this. I want to see a candle close above $69, right? There is the $70 mark, but if it opens here, we don't want a long resistance, but we can use that $69 mark as a stop loss. Because if sellers were willing to hold that level down and they get pushed up and out of AMD, Hopefully, anybody in AMD shorts was able to get out today because that it did exactly what we talked about. But even a good entry could be a candle close above 67.50 because for the most part, when you close I would say an hourly candle above that, you're not guaranteed, but pretty much going to go up to hit that down that top. So right here, that's $69 and 69. So it would either be a nice entry at 67.50 or a nice entry at $69. And there is a really, really beautiful imbalance right here that's begging to get filled above $70. So everything, all the magic happens above 70. And that's where you could start aiming for a really awesome target of 75, 76, and possibly even the ceiling at 78. But right now, or excuse me, 80/50. But when you're swinging longer expiration, you plan on trading around it. At what point is the expiration? Do you think about cutting it as a lost cause? Um, So there, it has to be a stop loss. So I actually took Tesla today, and I ended up having to close out of it. I ended up having to get out of the trade, and even though I had a longer expiration, I hedged myself, but I ended up holding the hedge and cutting the call. So there has to already be a plan in place saying, okay, if it doesn't hold this level, like just like I said with AMD, let's say you take it at 67.50. And then as that candle travels up, it hits $69. It breaks out, hits 70, right? You're in the position, and then it closes the candle, and the next candle ends up pulling right back down and closing underneath $68. That would give you time, but you would also know that if you close the candle back inside of this zone, that sellers are going to suck this back in, and you're liable to go back down to $66. So it allows me to, or looking at this, if I'm deciding, okay, so like right now I decided to take AMD $85 calls going out till next week, right? AMD moves up, hits $69, and then we see a full engulfment of this zone in itself, closing even possibly around 65.70. That would let me know that that position is more than likely going to fail. Because if we see a full engulfment, that means that sellers have gotten extremely aggressive and they're looking to drive that stock lower. That's just plain and simple. So that would be it. And really, this has a beautiful chart. I'm actually going to write this down because I really actually, I'd like AMD. I think AMD could be a nice little trade here to the upside. So, all right. Anyway, hopefully that makes sense. Chart looks good. XBI. All right, so let's go take a look at this one. Obviously, ETF, we want to start. I don't think I've looked at this one in a long, 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 long time. So this is how I would start any chart, right? Let's start from my highs. Looks like it rejected those highs and has since formed its own small downtrend. And let's go to the 4 hour. And maybe. Not a big fan of this price action ever, ever, like ever, ever. It's terrible, terrible price action. Very erratic. Not super easy to track. Obviously, regular hours, like always go and check that first. Definitely after hours makes for a really choppy, ugly chart. All right, so that's your downtrend no matter what. And it looks like that's your trend here at the moment. And your nearest zone is here. And it looks like, yeah. So right here, this is actually an awesome example of kind of just what I was just talking about. That's $82. Perfect. Okay, so you're building and holding above the $79 mark. No, excuse me, 78.90. So that's going to be where you need to hold. Period. End of story. That's where I would want to see XBI hold if I was watching it and looking to take it to the upside. We're seeing a lot of building underneath it, and there is a lot of selling pressure. So shorts are trying to push this down, which could only mean more fuel to the upside. So above $82, you've got a downtrend here, 83.53. And then looking at the daily, right? So we'll go step back out here, look at the daily. So that, right, we want to go ahead and mark out, straighten that up a little bit. All right, that's good. This appears, so whenever I see a downtrend, I want to find a level that is agreeable. So depending on the trajectory, um, I would assume that 85.50 and the small gap here at $88 would basically mark the potential upside, or give you potential upside on XBI, excuse me. There's also the potential that this is a very ugly head and shoulders, and that a daily candle closed below 78.60, and I would really say 78.36. 78.36 is going to be that main trigger, and you're more than likely going to continue dropping to the downside. So we can go and again look at where we bounced before, go and look at a couple key levels there. So I would assume that if we close below 77.62, that you are more than likely going to retest the 72.78 level. 73 is what I meant before. 72, yeah, 72, 78. I don't know. It's somewhere there. All right. So anyway, that's XBI. UCOM. I'm making my way down the chart right now, guys. Oh my God. I don't know what the hell I was drawing up there. A whole lot of stuff. All right. So I'm gonna show you guys. Do you see that? That's trend. Okay. This is how I find trend. Do you see that? Do you see that? That's it. That's money, dude. Beautiful. Fucking beautiful. So let's go look at this. I present to you a full ass clapping. All right. This is the reason why I like the standard deviation channel. There's no fucking reason that this should bounce at 82.24. It's just out in the middle of nowhere. Beautiful trend here. So my thoughts, it's actually a really good setup. I'll write this down as well. Worth watching, right? Maybe not now as far as a short, but definitely could end up being a short on earnings. So let's go and see if we have any lower time frame trend. We do. I can see that already. 4-hour time frame here. Nope. All right. So this is how this is going to work. You're good. Um, all right. I like that. All right. So here's what we're looking at. QCOM has a small remainder of its gap here to 118.82. That does appear to also be the standard deviation channel. So there's a big confluence in 119. So I'm going to tell you right now, the journey to the upside needs to be with some vigor. You need to see a really nice move to the upside. I would say 121 is going to be the median here. If this is in fact a potential wedge, we can go ahead and do our thing, right? We can go ahead and measure that wedge somewhere. There it is. From the top, make it drop. That's a decent ass chart. And that's money, dude. That's 133.50. And that's where your gap is. Holy crappy. So that looks good. If you can see some momentum build to the upside, QCOM actually looks pretty decent. If it can break and hold above in this little zone. So there's a ton of confluence right here. So you would want to get up and above this level so that way you can use this as support. But I would say ultimately the goal right now is 121 candle close. And I want you to notice something, okay? One of the things that I teach everybody while we're trading, what happens when you get a candle close outside of your box? Candle close, candle close, candle close, candle close, no candle close, no candle close, right? That's how we look at those things. That's how we watch and look for those type of trades. Now, what to the person who says, but what about that bounce? That is an excellent sign that your trade is worth taking. Why? Because sellers are trying to make sure that buyers do not control the price at 123.75. Candle close, buyers control, buyers control, buyers control, buyers control. Sellers in control. Did I move? No, I just moved. I have an office now. I just didn't. I just I liked it. I wanted it out in my living room, but I've decided to move it. Obviously, the kiddos. Ellie likes to give unwanted analysis, which if you guys aren't in the Discord, she hit it again today. You guys can ask the members. All right. Blah, 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 blah. So QCOM MRL. Do do do. Do, do, do. All right. Oh, damn. Damn. Okay. Nice. Here it is. Here it is. Bounced off a trend line. No, I didn't track any bottom trend line. I'm sorry. I'm pretty careful about charting like that, but yeah. Okay. 25, 12. All right. So whether it bounced off the trend line or not, but what I do see, right, is I see a candle close on the daily inside above 24.50. That's enough. I like that. That's enough for me to want to take that trade. Where you ended up rejecting or holding beneath, want to guess? That's the 75% mark, right? You know, look at the candles closing there. Look at the candle close there. Look at the candle open there. And look at the candle close there. That's 25.14. Gap up above 24.14. I'm banking on a retest and then a move back up. But it looks like this resistance may want to get a hit. A candle close above $27.40. I believe that MRO would start moving back up to the upside and resume and possibly even move into all-time highs. If I don't know if Thomas, if you're watching this later on, I know you're in Hungary, so it's probably fucking the middle of the night or the morning. But if you end up watching this later, this is exactly what we were talking about in terms of a nice, solid, potential, real long position looking to take something past. Maybe not all-time highs, but I don't know if this is all-time highs for tomorrow. It's not. In fact, now that you're looking at the weekly, looks pretty damn good. And you could see it move back up into the $40 level. So that's a good 100% there. All right. Let's see here. I'm gonna actually write that down as well. Starting to build a little bit of a watch list for some of the students that I do one-on-ones with every week, and this looks good. All right, CCL. Oh God, what a hot dog water stock, man! Absolutely the worst. No, we're gonna stay in trend with our most recent high and the change of trend. Damn, doesn't get much better than that. That's hot. That's pretty cool. All right, so Carnival Corp is CCL. Yeah, that's what I'm doing now. Carnival Corp's again another one of those hot dog water stocks. Not a big fan of CCL. Not a big fan of any cruise stocks. I believe this is kind of just uh, inevitable. That being said, I actually need to go back out to the weekly now because I need to go and look back at historical levels. Jesus, dude. Can you believe that they were up there? What a terrible investment. Damn. $6 and $5. Between $6 and $5. So based on obviously you've got this trend here. So there's a potential for a bounce, possibly. But this is coming after earnings. So I'm gonna say based on this trend, depending on how quickly you move down, I would say 550 or 535. Um, it does probably need a bounce, but you had a clean gap down underneath 850. That should have been all you needed to know for taking this short. Big power sell here. So it could be that you end up finding yourself, and again, no straight lines. There could just be a little bit of choppiness before you end up moving lower, and that would just lower the price target for CCL. So, do you think you're going to build more of a long-term portfolio through this bear market? I am starting to eyeball a couple of purchases. Yes, a couple of them. I did spy. If you go rewind to the beginning of the video. All right. Sorry, guys. Um, let's see here. I'm looking at these live, so if it takes a minute. We faking no charts here. All right, so this is how I would chalk this one up. I love that. That's great. So notice this floor right here. Um, this is 40.75. Um, notice these candles on the 40.75. You close the candle above that. So at the moment, it does appear that you are, and again, starting from your highs, moving to your lows, it appears that you're right up against a downtrend. So I would say that a candle or even a gap up above 42.40, and that could be all you need to potentially go and fill your gap up here to 44.75 or 44.67. Um, Sorry, I'm reading something right now. So 38.90, or excuse me, 38.95 seems to be the floor that you're holding right now. There's a gap. So if you do end up seeing a candle close below that line right there, $39, I would anticipate this gap getting filled and moving your way down to 34.75 and continuing your downtrend. But I see a wedge. So either you see another rejection and you do drop down and fill that gap. So I don't like drawing these lines very often, but you could be looking at something like that, right? And then that 50% reversal will be right there in the gap. I'm making my way down the list, guys, one at a time, trying to make sure that I get everybody's request. International game technology. All right, let's take a look at it. All right, so what did I just tell you guys? Remember, math. Let's see how this lines up. It may not. I think it does. Let me explain why I moved this down. Go up here, false breakout, again and again, right? So they built this thing back up to potentially return to highs. But notice where the candle drops. It opens up at $29 underneath that trend right here that it closes up underneath multiple times. and then falls down even lower. The median, 1, 2, 3, 1, 2, a lot of build underneath it, a lot of retest, retest. When you clear it, you move to the upside. When you lose it, you move to the downside, right? Clear it, upside, downside. So it doesn't matter how, but that's kind of that dividing mark, almost like those levels that we draw out. Secondly, once we've gone and identified trend, sorry, I gotta make sure that I'm not gonna give you half-assed analysis. I want to make sure that I know what I'm saying before I say it. And if I don't know, I'm gonna tell you I don't know. But I think yes. If anybody ever DMs me their chart, I may not be able to get back to you. You may need to send it to me twice. But if you bother me, I mean, obviously, at some extent, leave me alone if you don't go crazy, but like, send me your charts, send me your questions. My DMs are open for you guys. I'm a busy guy, but I'm not that busy. I do get a lot of DMs and I miss a fuck ton of them, like on certain days or months. But for the most part, I do my best to try and get to those. I have a certain, I've got a little schedule right here. This is my daily schedule and my weekly schedule, monthly schedule. I got to stay organized. Even each one of my mentors has their own notebook that I take notes on each one of their progress. So um, I set aside. I try and make sure that I set aside time to answer DMs. So you're more than welcome to do that. Um, All right. So anyway, I'm going to continue here. Bit of an imbalance here. So candle close above 1650. Candle close above. Maybe even on the hourly, I would go ahead and say that there's a solid retest of 1711. If you fall and you lose the median below you, which is 1580, I would suspect that you're going to go and make new lows. So right there. So right there, 1527. I would be looking for new lows to the downside. One thing from our highs, moving to our lows, right? Downtrend. It's looking like it might end up being around $17. So. All right, let's keep moving because I got to get to bed here. It's night night time. That's hot dog water. But like the rest, Warren Buffett's been going fucking hambony on this stock. Oh shit, damn, dude, that thing might end up going all the way to $80 again. No, it didn't even go there the last time. So let's do this. This stock is moving to the upside here. It looks good. It looks good. Real good. Real nice. Let's see real quick. Oh, that's funny. That's money, dude. Okay, so look at that. One way or another, this could be a trend, a change in trend, where you have a potential head and shoulders. This would be your shoulder. If you start to see rejections around $66, that would be one of the main marks that would divide Oxy. So above $66, this one and $670. I think this could be end up being a really nice hold if it continues and remains in trend. If it does not, and you end up seeing a rollover there, that could be a change in trend, and you might see it start to move down. But right now, it looks like a heavily accumulated stock. So I would venture to guess that it looks like above 65.80 and $66. I would expect for Occidental to continue to the upside. So nice little trend here though. Lots of key levels here too. I know, fuck, I might have to write that one down too. A lot of nice, a lot of nice stocks here tonight. Um, Incredibly interesting chart here on Microsoft. I actually, if I was anybody, I would be kind of excited just because this stock is either, oh my God, you very rarely see this type of price action. I was pointing out to one of the mentors today, look at this price action. The biggest moves that you're ever going to see are after really crazy consolidation, right? Always. And so looking at this big, huge move up and out, even here you get some crazy chop, big skids, that type of thing. Look at this type of price action. So when we go and look at this looks like people averaging in or buying into that selling pressure. That, right? We can go and break this down. If we gap up above 2 4, and in fact, I need to write this one fucking down. This is another really great setup because Microsoft will lead the market, the upside, tech in general. 242.20 candle close. That would be your retest level 241.50. If you can make your way up to 245.50 and get a candle closed above that bullishly, I have a feeling you will fill this imbalance and you will more than likely either A, obviously we just want to hit 245, but if that break happens, I would suspect that we're going to go back up to the 260, 265 level on Microsoft. So, all right, looks like we're at the end of our list. So, that being said, um, if we'll be live tomorrow morning, make sure if you guys aren't following in the new TikTok, I posted the link in the Discord. If you guys can do me a favor tonight, if you guys have benefited at all from these lives, just go spam the videos, just watch them all the way through, like, comment if you have a minute. Obviously live your lives first. It is not, TikTok is not that important, but if you have the time and you're scrolling, that would be pretty cool, trying to get the algorithm back on my side. But I already covered Meta at the beginning of the video, so you can check it out there. But anyway, I'll be live tomorrow morning. We're gonna trade Monday and Tuesdays. Wednesdays and Thursdays are gonna be just in the Discord, and then we'll do like kind of like a vote or a poll uh, type thing for Friday trading. So, but anyway, so I'll see you guys live tomorrow morning. Let's see if we can't catch another really good trade. The market's all pent up. We've got a lot of data coming in towards the end of the week. Jolts coming in at 10 o'clock. Um, yeah, Jolt's coming in at 10 o'clock tomorrow. Mester Williams speaking right before the bell. So we'll have a couple things to look at. But anyway, I appreciate you guys tuning in. And I'll catch you guys tomorrow morning. If it's not in the Discord, I'll be on live earlier than on YouTube. YouTube 9 o'clock Eastern time. So, but anyway, we'll see you guys later. Thanks. Peace.